We are back. We are back. Hold on. Alright, cool. We are back. FOMC coming out in 8 minutes? Yeah, 8 minutes. And I just woke up. Bro, I'm so tired. Um, it looks like we're having kind of like an SMT from these ranges. But let me just see something real quick. Alright. Alright, cool. Okay. So, let's do this. Alright, so right now on the daily, we're looking like we're getting an SMT from all-time highs. But these highs just got tapped into, which are all-time highs. And if we go to YM, those highs are not tapped into yet. So this is going to be the pair that we're going to be looking at and be following, assuming we have more room to come higher. So right now on the 7 hour, Jesus, man. Alright, banger. Okay. My bad. So 7 hour, we're reacting off of a 7 hour imbalance. We still haven't fully come out of this one yet. So if we do, that would probably, if we close out of it on the 7 hour, that would be bad. But we're not gonna see anything like that for a minute. So we're seeing a reaction from these levels. Let's go to the 15-minute, and we are seeing a push up from it. So let's see. We have disrespected fair value gap of that zone. This fair value gap got disrespected. We have no internal sweep. Is there an SMT? Most likely. Wow. We actually have equal lows. Alright then. Our invalidation point is gonna rest right there. Our invalidation point is also gonna rest right there for ES. And Q is gonna be our pair that we're gonna be following, so but yeah, FOMC in 4 minutes. I want to see how we react to this fair value gap right here, because that's the last one within the leg that we can look at. It's also this hourly one. Yeah, that hourly one. We'll see how we react to it. Oh, ay. price action has been nuts. Can't be able to enter it off of this. And it just fucking took me out here. That's some bullshit. Is Tradovich still down, dude? I gotta see. Oh, yeah. I can't believe Tradovate's down today. That's actually insane. And everybody was talking shit on Top Step X for going down. I wonder what to say about Tradovate. Dude, I just can't stop yawning. Alright, FOC just came out 20 seconds ago. How is this candle treating us? Where's market open high? That's the high. Why are we dropping already, bro? Okay, so the forecast 3.75. Source maintain the target range 3.550 to 3.75. Okay. Whew. It's just tight. Man, we still got 20 minutes, bro. Bro, 20 minutes for what? Jeez. That shit's annoying. Alright, fuck it. What are we playing? Let's play Minecraft. Man, do I gotta sign? I do gotta sign in this shit. Hold up, hold up, hold up. Yep, interest rates stay unchanged. Whoa. Okay, Tradeovate seems to be okay now. Bro, my Minecraft is all fucked up now. Yeah. Hold on, chat. This might be it. We might be able to finally get in. Bro. Let's go. Lock in. Tell me we're good. Yes! Yes, we're good. Oh my goodness, it took a minute. Alright, let's finally go. Holy shit, that took forever. Alright, chat, we're locking in. FOMC is gonna be up in like a couple seconds. Or in a couple minutes. Bet. We're in this bitch. Ooh. Fire. Whoa. So chat, we got that? Man. Alright, let's go. Lock in, lock in. Yo, chill out, bro. Come on now. Damn, bro. Hey. Damn, bro. Hold on. Alright, we back. My dog's tweaking out here.
First, as the reopening boosts softening. The unemployment rate was 4.4% in December and has changed little in recent months. Job gains have remained low. Total non-farm payrolls declined at an average pace of 22,000 per month over the last 3 months. Excluding government employment, private payrolls rose at an average pace of 29,000 per month. A good part of the slowing in the pace of job growth over the past year reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. Other indicators, including openings, layoffs, hiring, and nominal wage growth, show little change in recent months. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our index indicate that total PCE prices rose 2.9% over the 12 months ending in December, and that excluding the volatile food and energy categories, core PCE prices rose 3.0%. These elevated readings largely reflect inflation in the goods sector, which has been boosted by the effects of tariffs. In contrast, disinflation appears to be continuing in the services sector. Near-term measures of inflation expectations have declined from last year's peaks. Most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate
All right.
to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 3.5 to 3.75%. Since last September, we have lowered our policy rate estimates of neutral. This normalization of our policy stance should help stabilize the labor market while allowing inflation to resume its downward trend toward. We are well positioned to determine the extent and timing of additional adjustments to our policy rate based on the incoming data, the evolving outlook, and the balance of risk. Decisions on a meeting-by-meeting basis. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. We at the Fed will continue to do our jobs with objectivity, integrity, and a deep commitment to serve the American people. Thank you. I look forward to your questions.
Chris Rugaber at Associated Press. Thank you. I wanted to ask that you attended the Supreme Court hearing last week on the Lisa Cook case, and Treasury Secretary Scott Bessent criticized that as political.
So let me start with I don't respond to comments by other officials, whoever they may be. It's just not appropriate to do that. I will tell you why I attended. I would say that that case is perhaps the most important legal case in the Fed's 113-year history. Why I didn't attend. In addition, Paul Volcker went to a Supreme Court case famously expectations well anchored. Our success in delivering on these goals matters to all Americans. We at the Fed will continue to do our jobs with objectivity, integrity, and a deep commitment to serve the American people. Thank you. I look forward.
Oh, so the fee just actually cuts out. It ain't my shit.
So it's precedented, and I thought it was an appropriate thing, and I did it.
Great. And then just quickly follow on the job market. You mentioned last month that the household survey might be distorted. Which would suggest that we're still in a negative hiring pace. So do you see the drop in the unemployment rate as solid? And what's the basis for saying that things have stabilized? Thank you.
So, yeah, really two questions. One is, so we're getting through the distortions in the data from.
Oh, this is good.
So we're getting to a place where they're no longer material. They're still there, but it's a tweak here and there. The reason why we changed the statement, let me pull it out, was simply it used to say that
There's gonna be a trade right here.
Downside risks to employment rose in recent months. So we saw data coming in which suggests some signs of stabilization. I wouldn't go
and then a close above that
cooling,
would signify
and,
that.
so we thought that was no longer an accurate description of the data. In addition, the outlook for economic activity has clearly improved since the last meeting, and that should matter for labor demand and for employment over time. So for those two reasons, we thought we would take that language out of the statement.
Nick Timrose, The Wall Street Journal. Chair Powell, you've generally avoided engaging with political controversies directly, and the video statement on January 11th was a departure. What made this different, and are you concerned it could draw the institution further into political debates?
Yo.
So today on
we got Emerald's chat.
11th. 11. I'm not going to expand on it or repeat it. So I'm just not going to, this is really about the press conference and the economy and what we did today, and some ancillaries, but I'm not going to be getting into that.
Can you say whether the Fed has responded to the subpoenas?
I have nothing for you on that today.
Mike.
Michael McKee from Bloomberg. Remain as a governor of the Federal Reserve? And if so, would you tell us what it is? And if not, when might we anticipate a decision?
I forgot that's iron.
No, and I really, once again, have nothing for you on that today. That either.
Can I eat these? Can you eat that? I can't eat that.
Again, I don't want to get into it. It's not something there's a time and place for these questions, but not something I'm going to be getting into today. Thank you.
Thank you.
Trying to figure out like a place,
In another one that might
a home I can get into, but
lead
look
to
at
a
the markets
similar
real quick.
answer.
Okay. Yeah, we're not pushing up against that. I don't want to
Movements
get
in the
into
dollar
anything
over
right now.
recent days.
I
What
wanna
do
see
you
that
think is
push.
driving the U.S. currency lower?
Wait till 11:45
And
then.
have you been at all concerned just by the extent of the volatility we've seen this week? Thank you.
So, Claire, as you probably know, we don't comment on the dollar really over the currency and exchange rates and all that. We don't comment on that. It's not our.
Hey, don't mind that I just missed those couple shots right now.
But I mean, what's your view on the market movements? I mean, what do you think behind them? Is it asset managers diversifying? Is it?
Bro, why does shit keep coming out?
It's just not appropriate for us to do so. Really,
Is this my fault? I got too many things open, bro.
we do monetary policy and some other things, but we don't comment on the dollar. Sorry.
Neil.
Hi, Chair Powell. Neil Irwin with Axios. In the labor market and the statement, should we assume that the timeline for any further rate cuts is pushed back compared to what people might have thought in December?
Well, first of all, if you look at the incoming data since the last meeting, clear improvement in the outlook for growth. The data have come in, and sentiment, the Beige Book, everything comes in suggest.
I don't like how we keep cutting out, bro.
For growth. Inflation performed about as expected, and as I mentioned, some of the labor market data came.
Ooh, we get a purple bed.
So
Hold on, bro.
it's overall a stronger forecast, really, if that's your question. I'm not sure I answered your question.
But in terms of timing.
There we go.
What we'd say about this was that after this meeting, after the 3 recent rate
Nice.
cuts, we're well positioned to address the risks that we face on both sides of our dual
Yeah,
mandate,
low-key.
and we'll continue to make our decisions meeting by meeting based on the incoming data the implications for.
Nice. They have a light gray bed.
Things. But
Hello, crafty.
the economy is
Good
growing at a solid pace. The unemployment rate has been broadly stable. Goal variables and letting the data light the way for us.
Steve.
All right, well, FOMC doesn't look too bad.
Thank you.
For interest rates not moving. Seem chilling.
You had previously the higher end of neutral, and if you look at the longer run, the S&P and the longer run rate, 16 of 19. Fed's still in a process of bringing it down towards the middle.
Did was that 4 of the 19 were at or and if you look at the dealer survey, it was
Okay, we have a lot of food. We're chilling.
the higher end of the range. What we say is it's within the range of plausible estimates. It's neutral. I think, and many of my colleagues think, it's hard to look at the incoming data and say be it may be sort of loosely neutral, or it may be somewhat restrictive. You know, it's in the eye of the beholder, and of course, no one knows with any precision. So, is that, you had a follow-up?
I get what you're saying, but some bringing it down eventually over time. Are you still in that mode, or is this a place to hang out?
Yeah, no, I would say if you look at the SEP from December, most people had additional normalization. But at the same time, we've done a lot of the process of normalizing. A good piece of it is done with 75 basis points, and before that, 100. It's 100 in September of 2024. So you've moved now to, you know, 3 point, the Fed funds. So you've moved a good way, and we think we're well positioned here to watch how the economy performs, look at the data. We're not making decisions about future meetings, but we do think we're well positioned after those 3 cuts.
Amira. Thank you, Chair Powell. Amira Mokwe from Bloomberg News. To what extent did the committee discuss the possibility of cutting at this meeting or in March? And how are you all thinking about the conditions that would merit another rate cut? Is there broad agreement on the committee about what it would take?
So there was broad support on the committee. Broad, I would say, including among non-voters. So that's where that was. Of course, some people did want to cut and dissented, but committee pretty broadly for holding today. We're not trying to articulate a test for the next meeting. What we're saying is we're well positioned as we make decisions meeting by meeting, looking at the incoming data, evolving outlook, and all that. And we're in a position where we still have some tension between than it was. I think that the upside risks to inflation and the downside risks to have probably both diminished a bit. So we'll be looking at that. It's about how you weigh the risks to the 2 goals and how big those, and quantify them. And so there are different views on the committee, and we'll.
My dog.
Thank you, Mr. Chairman. Edward Lawrence from Fox Business. Has the effects of tariffs already moved through the economy on prices?
A lot of it has. So basically, there are many different, highly uncertain, but most of the overrun in goods prices is from tariffs. And that's actually good news, because if it weren't from tariffs, it might mean it's from demand, and that's a harder problem to solve. We do think tariffs are likely to move through and be most of the overshoot. If you were to take that out, you'd get, and you would, inflation, core PCE inflation is running just a bit above 2%, x the effects of tariffs on goods. And the other good news is, if you look away from goods and look at services, you do see ongoing disinflation.
Yeah.
So that's a healthy development. So that's what's going on. The expectation is that we will see the effects of tariffs flowing through goods prices, peaking, and then starting to come down, assuming there are no new major tariff increases that are begun. See that, if we see that, that would be something that tells us that we can loosen policy. Also, if we see something that suggests that the labor market is not stabilizing, that in fact or the data just get worse, we'd have to look at both of those. We have a 2-sided mandate.
If I could, if President Trump does pick a new Fed chairman before May, what does that look like? How would you work with that person, and what does that transition period look like?
I don't have anything for you on that. That will depend on. Can't speculate on.
Howard Schneider with Reuters. Thank you for taking our questions. Given the changes in the statement and all you've said so far, is it fair to describe risks to both sides of the mandate as roughly balanced right now?
You ain't gotta do all that.
Down.
You ain't gotta do all that, bro. Just chill.
I'd say that
you gotta do all that.
The upside, again, the
Chill
upside
out.
risks to inflation and the downside risks
That you
to
can
risks
do
to
anyways,
employment
bro. Yeah, chill out.
have diminished, but they still exist. So there's still some tension between the mandates.
All right.
Hard to say. Hard to say. And
That was a good entry right there.
We think our policy's in a good place. I've just discussed reasons why we might change our policy, and we'll just have to see how the data lead us.
I'm wondering, you a minute ago you said that the 2 and the 10-year break-evens have moved quite notably in the last couple of weeks, I believe. Is there any concern on that front?
I mean, I recently looked at all of the both survey and market-based short-term inflation expectations. They were in a good place at the beginning of last year. They spiked around Liberation Day, and now they've fully retraced in the last few months. So that's very comforting. And the longer-term inflation expectations have remained in place. So expectations have been solid, and they reflect confidence in the return to 2% inflation.
Andrew.
Apologies if this is a little bit repetitive, but in the past you've said that the reason the labor market was greater than the risks on the inflation side. Is that still true?
We haven't made. You're right. We saw the labor market weakening, and we acted, and I think that was the appropriate thing to do. We will always act to the economy moving away from our goals. Risks to both of the variables are a little less. I think the upside risk to inflation, again, a little bit less, and the downside risk to employment, a little less. I just would say that I'm not making a judgment about how more at risk than the other, just that the risks to both of them have diminished.
Okay, thanks. BIS wrote a paper last summer which concluded that global investors were hedging their dollar exposures and because of policy uncertainty. Do you agree with BIS?
We really don't see much at all about that whole story. There's just not a lot of data that suggests that there's much to that.
Thanks.
Anna Swanson with more about what you would need to see in the labor market to conclude it's time to resume easing. Do you need to see further deterioration in the labor market, or would it be enough for inflation to soften?
So we'll always be looking at both things. And so there could be combinations, infinite numbers of combinations that would cause us to want to. Market would be an argument for loosening. But what's happening with inflation? If inflation were at the same time getting worse, you just have a very difficult situation there. So we'll be looking at both. Clearly, a weakening labor market calls for cutting. A stronger labor market says that the rates are in a good place. Our judgments too on inflation, though.
And if inflation does pick back up and the labor market doesn't show further signs of deterioration, is there a chance that you could raise rates rather than simply remaining on hold? What would you need to see to consider hiking?
We don't take things off the table, but it isn't anybody's base case right now. Anybody's base case that the next move will be a rate hike. But ultimately we'll do. That's not where people's expectations are right now.
Victoria.
Hi, Victoria Guida with Politico. I wanted to ask, you've talked in the past about concerns about seen in the Japanese bond market a lot of turmoil recently, in part due to concerns over their fiscal and long-term economic outlook. So do you worry that the U.S. could at some point find itself in a similar situation to Japan, whether for fiscal or demographic reasons?
Over time, you've seen that U.S. rates they haven't moved a lot, really for a while, but they haven't moved a lot because of what's been happening in Japan. So it's more of an over time thing. The U.S. federal budget deficit is, uncontroversially on an unsustainable path. The level of debt is not unsustainable. The path is unsustainable, and the sooner we work on it, the better. But you know, right now we're running a very large deficit at essentially full employment, and so the fiscal picture needs to be addressed, and it's not really being addressed. So that's important. I'm not.
Okay, we're going to see how this hourly gets tapped into right
it's
here.
Something we'll have to deal with, and that, you know, in the end game, that's
I
where you
didn't
wind
die in my
up is
hardcore world.
in
Okay,
some
we're
kind of
good.
a difficult thing. But that's not where we are. It's not where Japan is either. But it's certainly not where we are right now.
Does it reduce the effect of your rate cuts that much?
I wouldn't say that. You know, the thing is, I mean, technically, higher longer-term rates means less accommodative financial conditions. But remember, many things move longer-term rates. It's not, and it's not mostly what happens on the short end. There can be effects of longer-term rates from our moving our policy around, but, you know, it's much more, you know, assessments of the fiscal
I'm waiting for
path
that
and
5 minutes to
fiscal
close,
policy.
and it's happening that fair value gap. Because if we react bearish to this, and then we tap into this
10-year
fair
run, you
value
can
gap
look
and
back
respect it on the
find
5 minute,
periods where we've been very
if
actively
we're
moving
respecting lower
the
time
policy
frame
rate,
PE
and
raise,
over the course of a year, and over the course of that year, the 10-year is exactly
oh
where it
my
started.
goodness, we're just
So
pushing.
it's not, there's not a tight link between
But it's telling you about price
10-year
action,
rates
what it
and
wants to
the
do.
overnight rate.
So yeah, the risk on this is going to be
Thanks so
pretty
much,
sure
Elizabeth Schulze with ABC News. Republican Senator Tom
21.
Tillis, who
205, like $200.
Fed nominee,
for
including the chair,
12
until
up
this
here, or
investigation into you is
1365.
resolved. Do you support this move by the senator, and what conversations have you had with the senator?
I have our
I've got nothing
right
for you
gap.
on that.
More broadly, what would happen to American households if the Federal Reserve loses its ability to operate independent from politics?
So really,
$40 loss. Do a $100 loss.
and it's
now.
not to protect policymakers or anything like that.
just need
It
to
just
respect
is
that
that
range.
every advanced economy democracy in the world has come around to this
So that is-
common
yeah, it's just 100.
practice. It's just an institutional
what you're
arrangement that has served the people well, and that is to have
Let's
a
see it tap into
separation
that.
between to not have direct elected official control over the setting of monetary policy. And the reason is that monetary policy can be used, you know, through an election cycle to affect the economy in a way that will be politically worthwhile. So this isn't, I'm not talking about the U.S. context. This is every advanced economy democracy of any size. So it's a good practice. It's pretty much everywhere among countries that look at all like the United States. And I think if you lose that, it's, first of all, it would be hard to restore the credibility of the institution if people lose their faith that we're making decisions, you know, only on the basis of our assessment of what's best for everyone, for benefit one group or another. If you lose that, it's going to be hard to retain it. And we haven't lost it. I don't believe we will. I certainly hope we won't. But it's very important, and the reason it's important is that it's enabled central banks generally not to be perfect, but to serve the public well.
You're confident it can maintain that independence at this point?
Yes. I mean, I'm strongly committed to that, and so are my colleagues.
Archie.
Until we respect them, let's put it down here.
Archie Hall from The Economist. On that sort of stabilization of the labor market question, how much do you see the weakening we saw over the past 6 months, year, as a kind of data mirage around immigration and the government shutdown and so on that's now resolved? Or how much have we seen a kind of real underlying firming up in the state of the labor market, do you think?
Let's see a push.
Well, part of it is, to your point, part of it just is that labor supply, growth in labor supply has come to essentially a halt from a fairly fast clip of growth over the last couple of years, driven by immigration, and then the halt being stop in immigration. So many outcomes were possible.
We're about to get another entry.
You know,
Hey,
supply came
241,
way down.
nice.
It turns out that demand
Good
for
shit.
labor also came down a very similar amount, maybe just a little bit
I'm
more,
holding
which
this
is
bitch.
why the unemployment rate has gone up. So I don't know whether that's a coincidence or not, but that's what's happened
down
with
here,
that part.
it's
But
like
if you look
it's
at
like a
other
2R. I can hold a 2R for this.
things like, for example, just to pick a couple, the
Respecting
Conference
that, so
Board's measure
we'll
of
hold it.
job availability that came
As long
out.
as we close
I
above
don't know,
on
was
that
it
12,
yesterday or today?
on
But
12?
you know, it shows
That's a
it's
higher
a
time frame.
survey showing
It's on that
that
7
workers
hour
feel
too. I
like
think
job
that's when
availability
it
is, it's a
when the
very
7
low
hour
reading.
open. So it's
Just
just a
one
big
reading,
move.
but it's an indication of softening. people part-time for economic reasons, which is a category within the broader U6 category measure, has moved up significantly. So there are lots of, and I could go on and on, there are lots of little places that suggest that the labor market has softened. But part of,
really good push on that.
Part of payroll jobs softening is that both the supply and demand for labor has come down. Growth in those two have come down. So that makes it a difficult time.
Yeah, there's a lot of liquidity, bro. I would hold that shit, to be honest.
You know, so imagine they both came down a lot to the point where there is.
Because we just respected this 5 minute fair value gap. We're probably going to close bearish on this candle, and then that next 3 minute at 12:03.
You know, that you could say that's full employment. At the same time,
that's another entry right
there. I really
there.
feel like that's a maximum employment economy.
And we're about to close over on that 15 minute.
It's challenging. It's very challenging. And
that 1 hour is being respected, situation. But I think we're going to blow through that right now.
Growth and the kind of strong growth outlook, your strengthening growth outlook you're now seeing, how much of that is the fiscal stimulus we're seeing from the beautiful bill, the tax cuts, and all of that?
So you're seeing it already. You don't have much of the fiscal. I think the outlook, you're right. It's financial conditions, and it's fiscal policy for 26. But you've got strong consumption that's been happening before financial conditions have been supportive, but before the fiscal effects really are shown. So essentially the economy has once again surprised us with its strength, not for the first time. And, you know, consumer spending across income categories, but consumer spending overall numbers are good, and we're benefiting from the AI build out of data centers. That's another thing we're benefiting from, but the economy overall, growth is on a solid footing. It looks like, and it's not just those things. It's just the consumer is filling out surveys that sound really negative and then spending. So there's been a disconnect for some time between downbeat surveys and reasonably good spending. Please don't do a retracement, bro.
Thanks, Chair Powell. Christine Romans from NBC News. You talked about how consumer spending is uneven. The president calls inflation defeated and solved. The FOMC says it's a somewhat elevated inflation. But you talked about those customer survey or those consumer sentiment surveys and public opinion polls that show that most families say the cost of living is still issue number one. What is the conversation around the table with your colleagues about how wealthier consumers seem to be driving so much of the economy, and why so many families still feel like they just can't prices? What is that discussion like?
So a couple things. One, there's something to it in that we know that higher income households that tend to own real estate and tend to own stocks, securities, and those assets have been going up in value, and increases in wealth do support.
Oh my goodness, look at that move, bro.
So, and that's clearly a part of the story. We also know that for some time now, for a year or more, we've been hearing from retailers, for example, that serve lower income customers, whether it be food or the big box stores or anything. They're saying the same thing, which is our consumers are looking to economize. They're trading down from brands, and they're buying less, and it's changing their buying habits.
Push that shit.
So we're seeing that.
I know you want to, bro.
That is a reality of what we're seeing. They're still consuming, but they're on affordability. We have a vast network through the reserve banks and also through the Board of Governors, where we talk to small and large businesses and households, and so we have
another entry coming in
about affordability, and we take that very seriously, and we take it to heart, because our job is one of our jobs is price stability, and so the best thing we can do for people who are feeling that squeeze is to keep inflation under control, and frankly, to finish the job of getting inflation back down to 2%.
You mentioned the AI build out as being a positive for economic growth this year. I wonder, as you look at the weakest year last year for job creation of a non-recession year since like 2003, are you concerned about AI maybe supplanting more entry-level work and entry-level jobs, and how does that play into what you're watching about the labor market?
AI and the deployment, and trying to understand exactly what's happening. And there's a wide range of possibilities. It's hard to say. And of course, anyone who uses it is amazed at what it can accomplish, right? So every technological wave will eliminate some jobs and create other jobs. And it's always been the case. If you look back, wave after wave after wave, there will be some disruption, but ultimately technology increases productivity, which is the basis for rising wages. And it may not all happen immediately, but over time, it's what enables incomes to rise. And we always ask, well, this is going to be different, you know, is it going to be different? And we don't know. And we may, in any case, see in the short term jobs that are being eliminated by the capabilities of AI. We may see that. We just don't know what the overall effect is going to be. So how to think about it in macroeconomic terms, it's very hard. You know, we can look at the aggregate data. We can analyze, for example, there is some connection, it appears, between the low hiring rate for recent college grads and AI. You hear large companies, though, many of them saying that they either won't be hiring for some time, or that they're hiring less, or that they're laying people off, and they tend to refer to AI when they do that. So we're all watching and learning, and it could certainly have pretty significant effects on the economy, the workforce, and our society. We don't really have the tools to address the concerns that may arise, but we have a lot of people who
yeah, I'm putting that to 8. I think that's just going to get hit.
Try to understand what the macroeconomic implications are, which is our job.
Becky.
You have a 5-minute candle.
Thank you, Chair Powell.
Close
Becky
bullish,
from
probably
AFP
gonna close
News
bullish on the
Agency.
next one too.
You mentioned earlier
Hopefully.
that on inflation, the broad expectation was for a one-time price increase and then for inflation to come down. And I was wondering, start cooling in the second half of 2026, and if you could elaborate how far we are from target currently. Thank you.
So how far we are from target is, as I mentioned in my opening remarks, we had 3.0% core PCE inflation over the 12 months ending in December, and that's pretty much what we had the year before. So on net, no progress. Modestly positive in that most of the overshoot was in goods prices, which we think is related to tariffs, and ultimately we think those will not result in inflation as opposed to a one-time price increase. Okay, so that's where it is. In terms of, you asked, so no one thinks they will, you know, ex ante understand really clearly precisely when this will happen, but there's an expectation that sometime we'll see tariff inflation topping out. So what we do is when a tariff is put in place, we track the effect of those tariffs over a 6, 7, 8, 9 month period, and you can see for that tariff how long it takes to reach a place where it's affected the price level, and that's it. So we're getting better at that, and our estimate is that it'll be sometime in the middle of the year, but I wouldn't look for great precision in that. But, you know, we'll be able to see whether things are moving in that direction. I think, you know, we will be able to see.
Richard.
Thanks, Chair Powell. I'm Richard Escobedo with CBS News. I want to look outside the U.S. about what's happening outside our shores and how it impacts the U.S. Canada's Prime Minister said last week that there's been a rupture in the global order, and I wonder how you're thinking about geopolitical risk as it relates to the U.S. economy.
So I can't comment on that. A lot of it is around energy, oil. And so far we haven't, you know, for all the turmoil, oil prices have come down, as you know, and so we don't really see much. You know, longer than that, it's trade, and, you know, the trade, our economy has pulled through pretty well, you'd have to say, given the very significant changes in trade policy. The U.S. economy has pushed right through. Partly that is that the way in addition, other countries didn't retaliate, and in addition, a good part of it hasn't been passed through to consumers yet. It's being taken by companies that stand between the consumer and the exporter. So That's where that is.
Jennifer. Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. With third quarter GDP growing, expected to have a 5 handle on it as to what the Atlanta Fed is predicting. At a time when you had a government shutdown and we thought that was going to shave off some growth, you've also got the fiscal tailwinds you've talked about, big tax refunds coming, potential tariff dividend. How could you cut rates and not spur inflation in that environment?
Well, we didn't cut rates today, but you know, it depends on how. Right? I'm just asking in principle. I'm not, you know, I'm not saying this is what's happening, but you know, there's growth, and there's how fast the potential is growing, and at a time of you know, high productivity growth, potential output is rising. So it really matters whether potential output is growing as fast as actual output, and it would matter over time. The numbers you cite were for quarters, and quarterly GDP is, you need to look at 12 months.
We've had our distribution of where market wants to go. We've tapped into that
Negative in the first quarter last year.
If we wanted to come lower,
overall,
we would have already done
the
it.
numbers
We're
were
just
nothing
having a
like that. It was
retracement
more in the mid-2s for the year.
So,
And how do you explain the divide right now between strong economic growth and the job market? Is it productivity that's filling the gap? And is productivity being driven by AI at this point?
So there has been, you're right, there has been a divide of
85,
and that can be explained by rising productivity. But I would say we do see signs of certainly of the unemployment rate stabilizing. So it may be we're seeing the beginning of the resolution of those two things. Also, as you probably know, the lore is that when GDP and the labor market get into an argument, in the end, the labor market data is more reliable. GDP data is just very hard to collect and understand, but nonetheless, I think we may be seeing that tension resolving a little bit. Too soon to say with any confidence, though.
Matt Egan with CNN. Chair Powell, after today, you have 2 meetings left as Fed chair. You've obviously experienced a lot during your time as Fed. What advice you have for whoever your successor might be?
Honestly, I'd say a couple of things. One is you know, stay out of elected politics. Don't get pulled into elected politics. Don't do it. And that's another thing. Well, another is that, you know, our window in
if we close above this
Congress
level,
and it's not a
that'll be
passive
great on the
burden for us to go to Congress and talk to people. It's an affirmative, regular obligation. If you want democratic legitimacy, you earn it by your interactions with our elected overseers. And so it's something you need to work hard at, and I have worked hard at it. So, and the last thing is, you know, it's easy to criticize. We're about to meet the most qualified group of people you not only have ever worked with, you will ever work with. And when you meet Fed staff, and not everybody's perfect, but there isn't a better cadre of professionals more dedicated to the public well-being than work at the Fed.
Thanks for that answer. If I may follow up, historic gains of late, and I'm wondering how much attention, if any, you pay to those moves, and what message you may take from these significant price increases we've seen for precious metals.
Don't take much message macroeconomically. The argument can be made it's, you know, that we're losing credibility or.
Ooh, what the hell?
Our credibility is right where it needs to be.
Ooh,
so we
okay,
look
I'm
at those
going
things. We don't get spun up over
Holy moly.
particular asset price changes, although we do monitor them, of course.
All right, bro, close the
Nicole,
bow.
for the last question.
2 more minutes. If we don't close about that shit, I'm putting my shit to break even, bro.
Prominent critics have charged that the Fed's economic models are
no way you better have horrible price
but should be more forward-looking, incorporating things like productivity increases from AI. How do you incorporate current and future developments into your analysis and decision-making? And
I'm not in the trade.
An answer
to be honest with you, quite frankly. Yeah, better respect them, man.
By and large, those criticisms.
Probably a lot of liquidity up here based on
as somebody on the inside makes sense, and I'll tell you why.
But if we close above
every FOMC participant writes down a forecast every quarter, right? The summary of economic projections.
Okay, chilling.
So, I mean, the other thing is, you know, what an economic model can do is it can grind up all the data for the last number of years, 50 years, let's say, and it can identify what are the relationships between variables A, B, C, D, and all that kind of thing. And it can tell you if you change one of those variables, this is what should happen in the macroeconomy. That's just the way it works. However, the structure of the macroeconomy is constantly changing. For example, we hadn't had a pandemic in 100 years. And in the model, and we knew it from the very beginning. It was not in the model. A trade. And so there's great uncertainty at different points. Another thing I'll say is, you know, when it comes to technological developments that raise potential output, some kind of technological renovation, revolution, like happened in the 90s here, and like maybe happening now with AI. We're all over that. And
come on, bro, you don't react the same way.
The possibility that this higher productivity may persist, and also that it may not. You know, no one's sitting here unaware of the possibility of higher productivity. We've been talking about it for 3 years. It long predates the current situation. It's been going on for 5 or 6 years.
We did not break through that shit, bro. Are we serious right now? We were supposed to do that.
It's very much on our minds, and we are well aware.
We're still up, but come on, bro.
Means higher potential
what do you mean? You better inverse this
the way you think about potentially inflation, growth, labor market, and all those things. That's all in our models.
Let's go.
I mean, if it's just a question of using better models,
we're not coming back down on my shit.
You know, where are they? We'll take them. But I think, you know, we certainly are in contact with anybody who does economic modeling. And we're always looking to do better at that. But that's how I think about that.
We're still targeting that.
And just a quick follow-up. We've been talking a lot about tariffs and passing through. We've been talking a lot.
Let's see. What's 100 divided by 16?
Is still in a
150 divided by 16. That's 9 points.
So I'm wondering
I will
how
risk
you actually
9 points for you, bro.
Track these. What data or channels are most
that's
critical
actually
to
pretty
follow
good.
this in real time?
Trade?
Yeah, the impact of tariffs and how they're changing.
Yeah, I think our staff has done a really nice job on that. And,
that's
and
actually good.
Put it together in real time. So as I mentioned,
I'm okay with it right there.
A tariff gets put in place, you can pretty much track its effects on pricing and on everything. And so you build a model up from all of the tariffs. It was very much of a forecast. Now it's every cycle that goes by, it becomes more informed by actual data. And you know, our forecasts were not far off. What changed was, as I think I said earlier, what was implemented was smaller than what was announced. In addition, we didn't see retaliation internationally, and I think people did generally expect that because we saw that in the past, and that really mattered too. And then the other thing is that pass-through didn't know how fast that was going to be to consumers, didn't know how much exporters would take, how much companies
I really want to see us close above. I don't.
Would take, and it turns out it's a lot of companies in the middle.
It is. I don't.
By the way, are pretty strong.
I don't like how this is moving right now.
You
know what I mean? Like,
which is
I mean, we did just sweep the high.
On inflation.
So, I'm okay with it. Kinda, but like,
we're done.
You know what I mean? Like,
okay. Thank you very much.
Yeah. All right. Well, FOMC is done. That boy answered some questions. All of them did not seem too crazy. Some of them were a little out of pocket, but you know, it's what it is, bro. It's chill. Yeah, I mean, we seem pretty bullish on the news, so. And we seem pretty bullish in the system as well. So I don't think that we are going to come lower, to be honest with you. I think this is an ultimate push higher. So I'm holding this shit. But I mean, it just depends because I really want to see us boof pack. Like, I want to see us go way past this fair value gap on that hourly because it's really annoying right now on our retracements and how market's reacting to it. So I really want to see us come higher, but we did open up on the 4 hour and 7 hour. New candlestick opening up right now on the 3 minute, I think. Yeah, this one just opened up. But overall sentiment, very bullish. I'm 8 micros in this. I'm only targeting 86 points for a max profit of, I'm not sure, let's see. 86 times 16. 1376 minus 176 equals 1200. So total profit of 1200 just because I wanted to make up the how much I'm down, because I was down like 172 but I was up 200. So I'm trying to make that back because that shit was a stupid ass mistake. And then the market wouldn't even let me close out of it. Oh shit. Okay, lock in, bro. But yeah, if this 20 minute has to go over, because there's no way you put in this much buying pressure above this fair value gap that you just went fully through to not go higher. Like yeah, go. Like I promise you, bro, it's chill, bro. You ain't gotta be playing with us like that, man. Stupid ass shit, man. Man, go higher, bro. Why you doing that? What are you targeting that's lower, bro? Didn't you already take out fucking previous day lows, bro? What are we doing? Lock in. And we opened up with a doji. I mean, that one's gonna boost back higher. There you go. Alright. Well, we'll come back to it in kind of like 10 minutes. I'm just gonna be playing Minecraft, bro. Be honest with you. That shit is what it is to me. I'm gonna put this shit at that low. I'm gonna put it at break even. Just in case of slippage, my stops are on profit. But yeah, we respected that fair value gap. There's a lot of buying pressure. I want to see that candlestick just fucking rip. Like, there's no reason why we shouldn't right now. There's no reason we should return back to these lows. There's no reason why we should do any of that unless we're targeting something lower. So if this hourly wants to be a bitch, he can be a bitch. Just, I don't want to be a part of that. I don't want to be a part of that, bro. Are you serious right now, bro? Are you serious right now, bro? You gonna do that? Well, I mean, if we come to this low, if we close out of it, then it's cooked. But I'm gonna stop to this low right here because there's no reason why we should come lower right now unless we're targeting something lower. That just is how it is. That just is how it is, man. So I don't know. We'll see. I just want to see that break. Really want to see that break. No reason. There's no reason why we should come lower, bro. There's no reason. If so, stop me the fuck out. I'm out of that trade. We'll see. I don't know if it'll say order filled, but right now we're on that adventure. I'm on hardcore mode. I'm trying to look for a place to build my home though, for real. Like, I'm really trying to settle down type shit. Like, this is like Traveler's Experience 101, you know? Day in the life of a day trader. Dude, we're in a fucking flower field right now. While up 200 on a trade. Up 300 on a trade. Up 300 on a trade, yeah. I thought it was gonna boost to 400, but chill. Ooh, cave. This ain't look like a good cave though. You good, bro? Man, this ain't even a good cave, bro. The caves are slowly becoming more and more realistic, where you're just walking in bitches and it's just nothing. I don't know if y'all ever seen a cave in real life before. I saw one the other day. Nothing, bro. Just a divot in the earth. That's it. Some bullshit like this, just way shorter. I was looking scared, bro. Like, back when I was little and I used to play like Minecraft, that shit used to scare the fuck out of me, bro. 400? Hold on. 400? Yes, sir. Yes, sir. Yeah, we're pushing. Put it at that low. I want to break it though. We gotta break that. You don't sweep and then come down on some bullshit though. Don't do that. I'm gonna wait till you close. I'm gonna wait till you close. Bro. Okay. Anyways, yeah, I remember when I was little and I used to be scared of Herobrine, and this was back in like Pocket Edition days. I don't know, like if y'all know, if you know, you know. Yo, yeah, nah. I don't know about that, bro. Stay over there. I got iron, bro. I leave you alone. I just want my iron. Nah, but real shit. I used to be scared of Herobrine on Pocket Edition because I remember you used to be able to summon him. So I was like, yo, Gabby, you want to do something? And she was just like Gabby's my sister. And that's her name. And I remember asking her, I was like, hey, like, can you help me with something? I want to build a portal to another dimension. She was like, you could do that? I was like, yeah, watch. And I showed her the nether. She didn't know about the nether. So she's like, oh, that's so sick. And I was like, okay. Instead of going somewhere and creating something that can take us somewhere, how about we create something that brings somebody else here? And she was like, what do you mean? And I was like, just trust me. Oh, fuck. Oh, fuck. I'm not going to try that again. Alright. I was trying to... Man, I was trying to run off the damn edge into the water, and it didn't, like... It didn't give me my sprint, dude. Stupid, bro. I can't believe that. I have golden legs I don't even know I was supposed to put on, bro. Alright, let's go. I don't really see anywhere that I really want to be at, though. Wait a minute. Hold on, bro. I do. A little bit. Let's see. Alright, hold on. Checking. Man, what are you doing? We did close about that shit. But why are we dropping now? That makes no sense, bro. That absolutely makes no sense to me, bro. Didn't even tap in anything, bro. Come on. Ah, we created an SMT. Alright. Let's respect this over here. If we can respect this at least, we'll be okay. Please get a sweep from that, bro. Because I know there's a lot of orders right there. I'm okay if you get a sweep from that. Don't stop me out. Don't do it. Don't do it. There's no reason you need to come lower, bro. There's no reason. Stop it. Yes. Do as I say. Go up. Like that. You know what to do. I'm showing you how to do it. Come on. Bro. Come on. Why you being stingy, bro? Push. I know you want to. Look, over here. He doing... Okay. Don't follow his example on S&P, bro. Don't follow ES. She's not a good example. I need you to push, though. Don't do that, bro. Come on, man. Why you doing that, bro? Nah, don't. Bro, don't. What, bro? Where you going, cuz? Why you crying? You go pee or poop or something, bro? Alright, go ahead. I'll hold it for you, go. Alright, well, we got stopped out of that trade, and that's annoying. How much are we up, though? Damn, we're down. We lost $2 on that shit. We're probably going to go up. I probably should have kept my stop loss where it is. My dog want to go outside, though, so. Anyways, bad price action. It don't matter. I kind of wanted my shit back. I'm taking you. Hey. I'll take you out right now. I'm coming. All right.